Well, welcome everyone to our live Q&A session. My name is Natalie and I'm here with Dmitriy today. We will be answering all of your self-directed IRA and solo 401k questions. We have a lot of questions that were submitted, so we are going to jump right into this. If there are any additional questions, just go ahead and type them up in the Q&A chat area. We will go ahead and make our best effort to answer them today, but if not, an alternative is to register for our next live Q&A session, which will be on Monday, May 8th at 11 a.m. Pacific Standard Time. You can go ahead and submit your question when you register there. We also have an upcoming webinar, which is on Wednesday, May 3rd at 5 p.m. Pacific Standard Time on Solo 401k, the ultimate retirement plan for the self-employed. So be sure to register for that. And before we get started, I will give a brief introduction about Dmitriy. Dmitriy is the founder and the president of SenseFinancial Services, LLC, which is a boutique financial firm that specializes in self-directed retirement accounts with checkbook control. He began his career back in 2000 in financial planning and real estate investing. Today, he's a licensed California real estate broker, a real estate investor, and a private lender. Over the years, he's taught hundreds of investment and financial seminars and mentored thousands of investors. So welcome, Dmitriy. Thank you for taking the time to answer all the questions that were submitted.
Thanks, Natalie, and welcome everyone. Looking forward to diving into the questions. And I love questions because they really help other people. It's not just you learning, so I do encourage you to listen to what other people are asking, and I'm sure you'll learn from that and share it with other people who can benefit from it as well, because I'm sure there are other people who can learn. So let's dive in.
Okay, our first question is from Jim. For the solo 401k, are there any single person self-employments that are not allowed?
I think Jim is asking about the eligibility question, and really there is none. If you have legitimate self-employment activity, then you're certainly eligible for solo 401k. The activity can be in any shape or form, and you certainly qualify if you are self-employed. There is really no limitations to that. If you receiving 1099 income, or you're making some sales or something like that, if you're reporting your income on Schedule C, then you are eligible.
Next question is from David. Do you have a solo 401k? If yes, what's the best use for that you have found for it?
I think the question is about the investments, and I certainly practice what I preach. I do have a self-directed account, and I do invest that. Primarily, I do private lending. I found that for me personally, the best way to put my retirement dollars to work for three reasons. Number one, it's passive. I'm a busy man. I run a business full time. I have family. I have church obligations and so on. And I like being private investor. So that's number one. Number two, returns are very, very nice. I usually get double-digit returns on my loans that I lend out. And then number three, it's the risk is low because your investment is secure, or my investment is secure. But I also have some syndications in my retirement account and own a couple of rentals. So I have variety.
Great. So next question is from Joey. Is solo 401k a protected asset? In other words, free from lawsuits or judgments?
Yes, 401k does offer legal protection from bankruptcy and judgments, but it also depends on your legal, on your state law. So I'm not a lawyer, and you should talk to the asset protection attorney or just seek some legal counsel if that's your concern. And that basically depends on the state where you're at. It's state specific.
Next question is from Doris. Can you transfer funds from a checkbook IRA to a CD at a different bank at a maturity return it back to the checkbook IRA? Also, can the checkbook IRA roll over to a solo 401k since once established?
Yeah, so I think Doris is asking, can you use your checkbook IRA to put some cash in a CD? You will not be moving it out of the checkbook IRA. That's something that I want to emphasize, Doris, that you understand. You're doing this inside of a checkbook IRA. So the checkbook IRA is essentially IRA-owned LLC. You have LLC that your IRA owns, and then think of that as an umbrella. Okay, so under your LLC umbrella, you can have a checking account with our preferred bank, Solera, who's also might be your custodian. You can own a piece of real estate, but LLC can also own a CD. Although I want to mention that CD is not an investment. Yes, it gives you probably maybe 3% you can earn nowadays, but it's still not enough even to cover the inflation. So you truly want to invest in something that produces better returns. It's a different subject, but you certainly can. Your IRA LLC can own a CD. And the second part, can checkbook IRA be moved to solo 401k? It certainly can be. Except if your checkbook IRA is a Roth IRA. Roth IRA cannot go into 401k, but any other IRA can be moved to a solo 401k if you're eligible. So yes.
Okay, next question is from Chris. If I have a checkbook IRA with another custodian, is there a process to move to the custodian that Sense Financial works with?
Certainly possible. We've done that number of times. Just be sure to reach out to our office. If you already have a checkbook IRA, that means you already have the LLC that your IRA owns. So the IRA will have to be transferred from one custodian to another. It's called the transfer. That's the legal term. And then we will have to amend the LLC operating agreement to change the custodian and just make sure it's up to date. But yes, certainly possible. Reach out to our office and we can talk about the specifics.
Okay, next question is from Jesse. Sometimes I acquire properties subject to the underlying mortgage. If I put a property in my solo 401k or checkbook IRA, can the lender foreclose the repossess the property at any time in the future?
Jesse, I think you're asking about what's the term? I'm trying to find due on sale. That's what it is, due on sale clause. So if you're acquiring a property, it doesn't matter whether it's your checkbook IRA or solo 401k, or you use your personal name to acquire that property, or use some other entity. If there is a lender, typically they will have a due on sale clause, meaning that if you sell the property, then the loan is due, and lender can exercise that option and call the loan due. So that's something that you have to look into the loan documents. I can't, generally it's possible, but again, based on my knowledge, if you acquire a property like this, as long as you make the payments, generally lender doesn't care, and they're probably not gonna foreclose. They might not even know about the fact, but it's certainly a possibility.
Okay, next question is from Jim. Can a holding company be my single member self-employment?
Can a holding company be my single member self-employment? I think Jim is asking about the solo 401k eligibility question. So if you trying to set up a solo 401k and trying to see how you can qualify for it. If you have a holding company, let's say an LLC for a rental property, well, that's not self-employment, unfortunately. So that's not going to qualify you because you have to have the legitimate self-employment activity to qualify. And if you're just own a rental property, that produces passive income, and unfortunately that won't qualify you.
Okay, we have a question from Annabelle. Will I have until October 2023 to make contributions to my solo 401k plan for 2022?
If you have a solo 401k and you're trying to make a contribution, you do generally have until tax filing deadline plus extension. But there's a couple of caveats that you need to be aware of. The contribution deadline depends on the type of business that that sponsors the 401k plan. So if you're sole proprietor or a single member LLC and you file for an extension, then you potentially have until the day you file your taxes to make the contribution. Remember, you have to make the contribution before you file your taxes. If you already filed your taxes, contribution must be made by that time. But if you are incorporated or if your LLC is taxed as an S Corp, then there are two components for the contributions. It's employee elective deferral and the profit sharing component. So the employee elective deferral for corporations or LLC taxes on a corporation, because you're taking a salary, must be done through the payroll. So typically you have until the end of the year. That needs to be done before end of December, because you can run the payroll right now in April. Even if you file for an extension for your personal taxes, the salary is done. You can't pay yourself salary for 2022. So it's too late to make any elective deferral contributions, but the company profit sharing contributions, again, if you file for corporate extension, you potentially have until September 15 to make that profit sharing contribution. But remember, potentially you have until then, but you have to make the contribution before you file your taxes.
Okay, next question is from Tom. Can I convert part of my checkbook IRA to a Roth if I have total invested in real estate?
Tom, if you have a traditional IRA and if it's checkbook, then there is a LLC essentially that your IRA owns. And if that LLC owns a piece of property, technically it is possible, but it's going to be somewhat challenging because you now have, you're going to have to transfer a portion of the property into a Roth. So that's going to be quite a bit challenging, not impossible, but it's going to be very challenging to accomplish that. So it's certainly easier to convert the entire IRA into a Roth, but doing that, a portion you'll have to either retitle the property or amend the LLC and open up a new IRA, have to get the property appraised. Certainly possible, but it's something that I will recommend that we talk specifically. So reach out to me, schedule a consultation. Let's talk about the specifics.
Okay, next question is from Jose. I have a self-directed IRA LLC purchasing investment properties. Can you explain non-recourse loans and how your company can assist with finding the proper lenders?
Jose, good question. Generally, if you do have, or if you're trying to acquire a property using leverage inside of an IRA or 401k, the IRS rules prohibit you from providing personal guarantee for the loan. That's what the non-recourse lending comes in. Non-recourse lending basically means that there is no, you're not providing personal guarantee for the loan. The property is the only security for the loan. The only assistance that we can provide to you is direct you to the list of non-recourse lenders. And we do have that list on our website. If you go to SenseFinancial.com and then under checkbook IRA menu, you will see a non-recourse lenders there. You have to reach out to those lenders, and each one of them have different programs. One lender might have a program that will be a better fit for you. Solera, we work closely with Solera. They're our IRA custodian and preferred bank, and they have great programs. So reach out to them first and see what they can do for you.
Great. Our next question is from Rich. Are my investments from my solo 401k subject to my RMD?
Yes, the 401k will be subject to RMD. There has been some changes in the recent changes in the IRS rules that Roth 401k going forward will not be subject to RMD, but your traditional IRA will certainly be subject to RMD. And remember that your 401k has a separate RMD requirements than an IRA. Whereas, for example, if you have two IRAs, you can combine them to calculate the RMD, and you can just take the RMD from one account and without touching the other account. But if you have an IRA and you also have a 401k, you will have to calculate RMD for each one of them independently, and you will have to take the RMD from the 401k account, regardless of the IRA.
Okay, next question is from Jay. If I have an old SEP IRA from a business and want to convert it to a solo 401k, but only have passive income at this time, can I still convert it to a solo 401k?
Jay, based on what you're telling me, it appears that if you only have passive income, then you're not self-employed. You don't have any earned self-employment income, so you're probably not going to be able to qualify for a solo 401k. Maybe I'm missing something. Again, feel free to reach out to me directly. We can talk about your specifics and see if we can find, but based on the question, it appears that you're not eligible for solo 401k. But you can certainly convert that SEP IRA into a checkbook IRA, and you can still have the control of your IRA funds and accomplish the same thing that you can with the solo 401k by using a checkbook IRA.
Okay, our next question is from Brian. What happens to solo 401k if you are no longer self-employed?
Well, Brian, remember the difference between an IRA and a 401k is this. If you have an IRA, it's an individual account, individual retirement account. Anybody can have an IRA. There is no qualification for that. If you have money in one IRA, you can set up a self-directed IRA and move funds into it. And you can, there's two ways to add funds: by moving money from an existing retirement account or contribution to it. And contribution has to be made from the earned income. But solo 401k is different. 401k is employer-sponsored plan. It's, you're no longer, individual cannot have a 401k. You must be a business, or there must be a business to sponsor the 401k. And for self-employed individuals, your sole proprietorship can be the sponsor of the 401k. You don't have to have entity to qualify. You can be a sole proprietor. And that's legitimate business type that can establish a 401k plan. But if that business ceases to exist, then 401k will have to be terminated and converted to an IRA. If you start another business or another self-employment activity, we can amend the plan and the plan can continue, but you have to maintain some degree of self-employment activity in order to maintain your solo 401k plan eligibility.
Next question is from Sam. What is the due date to make contributions for solo 401k for 2022 tax year in OC?
Sam, I'm assuming OC means Orange County. It's actually relevant where you're at, whether you're in Orange County, California, or in DC or elsewhere, or we even have clients who don't reside in the US. They do have US-based business, but they actually reside outside of the US. So that's irrelevant. The rules are the same. The deadlines are the same. And as I mentioned earlier in my answer to the previous question, deadline typically, if you are incorporated business, it will be until it has to be done through the payroll, and generally you have to do it before the end of the year. If you are a sole proprietor, you have until tax filing deadline, which is April 15th, typically, to make those contributions. If you are filing for an extension, you have until October 15th. And then the profit sharing contributions will be the same for sole proprietors and single member LLCs. If you are incorporated, S Corp, C Corp, or LLC taxed as a corporation, you have until March 15th. That's generally when the tax filing deadline is. And if you file for corporate extension, that will be September 15th. But remember, the actual contribution has to be made before you file your taxes.
Okay, next question is for Mel. We filed an extension for our 2022 taxes. If we want to contribute to our self-directed 401k, can we contribute after we filed our taxes? Or do we need to contribute before April 18th?
Again, Mel, similar question. The contribution can be done after April 18th if you file for an extension, but it has to be done before you actually file your taxes. You might file for an extension, and now your extension might be in effect. And then if you file your taxes on June 15th, the actual contribution, you have to make the contribution before June 15th, before the day you file your taxes.
We have a question from Jody. Can you manage your own rentals under a solo 401k if you hire all repair work out?
Good question, Jody. I'm assuming when you say your own rentals, you mean not your rentals, but the rentals of the 401k. So if your 401k plan owns a rental property, can you manage it yourself? Well, it's a good practice to have a property manager so that you completely separate yourself, but you're not required. If it's a long-term rental, you're not required to have a property manager, and there is a difference in what you can do. You're not allowed to provide any services to your 401k plan. So if you don't have a property manager, you're going to be limited what you can do. And one way to describe that, I like this illustration of a difference between a white-collar worker versus blue-collar worker, right? A blue-collar worker is someone who's working in the factory or in a shop, working with their hands. You can do that kind of work. So if you own a property in your 401k, all the work has to be outsourced. You can't go and replace a light bulb, as simple as that, or mow land, or replace a door lock. All that work has to be outsourced. But you can be in your home office at your desk in front of your computer. You can pay the bills. You can be on the phone. You can take the call from the tenant and about potential repair, and you can select a contractor to go and take care of that issue. and then pay them for the work that you're doing. So you can do that. So you're limited what you can do. Remember that difference between a blue collar worker and a white collar worker. It's a good illustration to keep in mind.
Next question is from Amy, and this question has two parts. If I try and purchase a property in another state with my solo 401k money, but it will only be a down payment, do I have to get financing from a non-recourse loan company? And I would like to rent this property out, and was wondering if after I turn 65, if it is possible to stay there part-time. If not, is there any age in which I am allowed to stay at the property? Wouldn't that in a way be considered a distribution to myself after retirement age?
Good question, Amy. If you wish to purchase an investment property in your retirement account, whether it's an IRA or 401k, you cannot use conventional financing because that will require you to personally guarantee the loan, and that's prohibited. So the only option is non-recourse financing. And yes, you can get a non-recourse loan. It's not difficult. If property qualifies, there is really no reason why you won't get a non-recourse loan. Typically, non-recourse lenders require at least 30% down, at least 10% in reserves. So you need about half of the purchase price, maybe a little bit less, to acquire the property. You have to have that much in your account. Certainly possible. The second part of the question, you personally using that after retirement. If your 401k owns the property, then the rules of the IRS prohibit you from receiving any personal benefits. So using that property, even occasionally, will be considered receiving benefits. That will constitute a prohibited transaction. So absolutely not. You cannot ever use the property for your own personal benefits or benefits of your family members ever while it is in the 401k. But what you can do, Emmy, is you can, once you reach your retirement age, you can do what actually one of my clients have done. They purchased the property in their 401k in Belize. They intended for that property to be a retirement property, but they owned it in the 401k for a few years. And then when they reached the retirement age, they took a distribution of the property. It's called in-kind distribution. So rather than taking cash out of your 401k, you can distribute the property out. So you will have to appraise the property, determine that will determine the taxable amount, and then you will have to retitle the property, change the title from the 401k, own it, the title to you personally. And once you do that, then it becomes your personal property. You do whatever you want to do with that property. You can live in it, you can rent it out, you can let your family stay in it. That's going to be up to you. But while the property is in the 401k, while 401k owns the property, you're prohibited from using it personally, receiving any personal benefits from it. It has to be for the benefit of the 401k only.
Next question is from Gatimo. How can I use my IRA to finance my business or refinance my current SBA loan with 12% interest rate?
Well, unfortunately, Gatimo, there is the answer to that is there is no way you can use your IRA to finance your own business or refinance your SBA loan. There is no option. You'll have to find other ways to do that. Your IRA can be used to make investments only. It cannot benefit you personally in any way. So there isn't an option. With the solo 401k, there might be some ways you can utilize the 401k proceeds to benefit you personally by using a participant loan. It's not possible to take a loan from an IRA, but you could take a loan from the 401k. the loan is limited to $50,000 or 50% of the balance. So if you have some cash in the 401k and you have high interest debt, you potentially can take a loan from the 401k and you can pay off that high interest loan and just start paying back to your own 401k. But it looks like you have an IRA, so there is no option for an IRA, unfortunately.
Okay, Brian is asking, can you buy a tax lien in a solo 401k?
You certainly, Brian, can buy a tax lien in a solo 401k. Nothing prevents you from doing that. Some of my clients done it, and you can do it as well. Yes.
Okay, next question's for Matthew. If a syndication does not allow a self-directed IRA investments, will they allow a solo 401k investment?
Well, Matthew, that's a question to ask the sponsor of the syndication. I can't answer that for you. I don't know which syndicator you're referring to. I don't know their rules, but it's a good question to ask them. And syndications, where some do allow investments from IRAs, some don't. Some allow from the 401k, but not from an IRA. Some allow from both or neither. So again, it's a question to direct to the sponsor of the investment.
We have a question from Anthony. Can the employee and spouse of an employee do a direct rollover into a new solo 401k?
Can the employee and the spouse of an employee do a direct rollover into a new solo 401k? Well, first of all, Anthony, in order to establish a solo 401k, you must be eligible to do so. So if you're self-employed and if you're establish a solo 401k, you certainly can fund it with the rollover from another retirement plan that you may have. Now, if you have a spouse who is eligible to participate, your spouse can do the same thing, but spouse must be eligible. Spouse is not eligible just by being a spouse. Spouse must be involved in the business. So if you have a spouse who's involved in the business and receives compensation from the business, then spouse can participate and also do or fund their 401k by the rollover from another retirement account. But again, they must be eligible. Your spouse doesn't automatically qualify just by being a spouse.
Next question is from Joseph. What investments other than stocks or bonds does a brokerage like Fidelity offer for my solo 401k?
There is not many options with Fidelity. You know, stocks, bonds, and mutual funds, that's pretty much all the brokerage offers. So if you have a solo 401k sponsored by the brokerage, then unfortunately you're limited. But if you use SenseFinancial to establish your solo 401k, you can have a brokerage account with Fidelity, but you can also invest in anything else. Our plan documents don't have any restrictions on investments. You can invest in virtually anything. You just have to follow the IRS guidance, and IRS, the only investment that IRS prohibits will be collectibles. So you're not allowed to invest in collectibles. You're not allowed to invest in any transaction that involves disqualified person. Other than that, you're completely free to invest in anything you want.
Okay, next question is from Bennett. Is it possible to divest a piece of real estate in a solo 401k to the owner or beneficiary of the account?
Yeah, I think it's a similar question that we had earlier. If you own a piece of real estate in your 401k, it's possible to take in-kind distribution from the 401k. Instead of pulling cash, you can pull out the property an asset, and that will become your personal asset. At that point, you will have to retitle that. You will have to get it appraised. It will be a taxable event if it's a pre-tax 401k portion. If you're doing this before retirement age, there will be penalties as well on top of that. If it is a Roth, then that will be a tax-free distribution, assuming if it's a qualified distribution from a Roth.
Okay. Our next question was asked by Kevin. Can I use my 401k to put in option to buy a property and assign to someone else with a profit going?
Let's see if I understand that. Can I use my 401k to put an option to buy a property and assign someone else with the profit going? Well, it looks like, Kevin, what you're attempting to do is you're attempting to run a wholesale business out of your 401k. So while technically it might be possible to do so, but there's a couple things you need to be aware of. Number one, you are to invest your 401k funds and in a passive manner. You can be involved. So how are you going to find that property? If you're going to go and look for that property, that's you personally now getting involved in that. So that might be a prohibited transaction. And even if that was possible, if you actually assign a property that you took a contract with your 401k to somebody else, that assignment fee most likely will be subject to UBIT tax because it's no longer a passive investment. You're now running a business. So two issues. It's not something that I will recommend, Kevin, because of two issues. You potentially running into a prohibited transaction, and then number two is UBIT implications from this. You want to ensure that you're investing your 401k funds passively, then all the gains and income will be sheltered from taxes, and you won't be in any violation with the IRS.
Okay, well, we have a few questions in the chat that we might have a few minutes to answer. From Matthew, many syndications indicate they do not allow self-directed IRA investments. What is the reason? And does this mean that solo 401k are disallowed as well?
Yeah, I think we had a similar question. I don't know if it was the same person. I don't remember the name who asked this, but I've seen both. I've personally been investing in syndications for a number of years, and I've seen both. The reason why, I think one of the reasons, because of the additional complexity. To give an example, if you invest in a syndication, then if you invest personally, it's simpler. If you do it with your IRA, then the sponsor will have to provide the valuation of your share every year. So that's an extra work for the syndicator or for the sponsor of that investment. They may not want to do that. And that might be one of the reasons that they disallow. But again, it's not automatically means that your 401k or that you're disallowed to invest with the 401k also. A good question to direct to the sponsor of the investment.
We have time for one more question from Tom. When hiring someone to work on an IRA property, can the cost be considered when taking RMD?
When hiring someone to work on an IRA property, can the cost be considered when taking RMD? I'm not sure if the question makes sense, because if you have an IRA, if you have a property in an IRA and there is some work needs to be done on the property, then that's an expense. It's not a part of the R&D. It's like you have to pay property taxes on the property that your IRA owns. You have to pay property management fee. You have to pay insurance, and that's just a repair. You're paying for the repair of the property. I think Tom is clarifying, can it be written off? Not by you personally. It's not your property. It's not your expense. So you personally can't write it off. It's not your expense. It's an expense of an IRA. So IRA incurs the expense, and then when you calculating your R&D, then you obviously that's going to be taken into effect, because you incur the expense. So your total value of the IRA is going to be less, and you're going to have to use that value to calculate the R&D. So I think we have a couple more questions. Let's get them all. We do have some time. Natalie, let's try to get all the questions.
Sounds good. Okay, from Mark, can investment funds from Solo 401k be commingled with funds from other retirement accounts of the same individual, like HSA or Roth, on the same project?
Well, Mark, you can never commingle the funds, but it's possible to pool the funds together to make a joint investment. You can never commingle the funds, but it's possible to co-invest alongside. It's not advisable, and I will need to give you an accurate answer. I will need to know the specifics, but if possible, try to just in general, it's not in your best interest to bring any partner with your IRA, whether it's a disqualified person or just some other unrelated party. It's much cleaner to do, and just much you avoid potential issues. But if there is a disqualified person involved, under certain circumstances, it could be possible, but I need to know all the facts to give you an accurate answer.
Okay, and then from Sophie, I have a LLC for real estate investment. Can I have a solo 401k? And she also adds that all LLC income is from rent income and 1099 income.
I think we had another question that is similar to that I answered, but again, if you're you must have legitimate self-employment activity with earned income to qualify for a solo 401k. So if you have an LLC that holds rentals, and the only income that it generates rental income, that's passive income. That's not self-employment income. That's not business income that will qualify you. So in this case, the answer will be no. You will not be eligible for solo 401k, unfortunately.
Okay, well, those are all of the questions. So this brings our Q&A session to an end. We're very glad that you all were able to join us this afternoon. Our next Q&A is going to be on Monday, May 8th at 11 a.m. Pacific Standard Time. And we also have an upcoming webinar, which the topic is Solo 401k, the ultimate retirement plan for self-employed. That is next week on Wednesday, May 3rd at 5 p.m. Pacific Standard Time. If you're interested, make sure to register, and we hope to see you there, and have a wonderful day.
Thank you for joining us. Again, just want to encourage you guys to share this with other people. I'm sure you know people in your maybe family members, friends who might benefit from this. I learn typically a lot myself when I just listen to people ask questions on a certain subject. That's even more beneficial. So do that, and you guys have a great rest of the day. Great questions. I enjoy answering all of them, and we'll see you next time.